Hey everyone, welcome back to Corporate Decoder, the place where we shine a spotlight on the inner workings of the corporate world. Today we are dissecting Beyond Air's latest quarterly report, and let me tell you, it is a fascinating look at a company trying to navigate the choppy waters of medical innovation and financial reality. Stick around to see if this company is on the air or about to go down. And before we dive in, if you crave these kinds of straightforward financial breakdowns, make sure you are subscribed right now. We also have a fantastic community over on Discord linked in the description below where we discuss these filings further, so come on over. Alright, so we are looking at Beyond Air Incorporated's quarterly report for the period ended the 30th of September 2025. This is essentially a peek under the hood of their financial health and operational progress. Let us start by looking at the company's financial snapshot, the balance sheets. As of the 30th of September 2025, the company had cash and cash equivalents of about $9.7 million. Now that might sound like a lot, but look at their total assets, which stand at over $30 million. And on the other side of the ledger, their total liabilities are a whopping $17.8 million. This means a significant portion of their assets are financed by debt or other obligations. Now for the main event, the income statement for the 3 months ended the 30th of September 2025, Beyond Air reported a net loss of $8.3 million. That is a substantial loss, and it continues for the 6-month period as well, with a net loss of over $16 million. This tells us that while they are generating some revenue, their expenses are significantly higher than their income. Speaking of revenue, for the 3 months ended the 30th of September 2025, revenues were about $1.8 million, a nice bump from $0.8 million in the same period last year. For the 6-month period, revenues reached $3.6 million, an improvement from $1.5 million in the prior year. This growth is encouraging, but it is still a long way from covering their costs. Their cost of revenues, however, is consistently eating into that revenue. For the 3 months ended the 30th of September 2025, it was $2.1 million, leading to a gross loss of $0.3 million. For the 6-month period, cost of revenues jumped to $3.7 million, resulting in a gross loss of $42,000. Essentially, they are spending more to generate sales than they are earning from those sales. These substantial losses are partly driven by significant investments in research and development. For the 3 months ended the 30th of September 2025, they spent $2.5 million on R&D. Over the 6-month period, that number grew to $5.5 million. This is a critical area for a medical company, but it also highlights the long road to profitability. And then there are the selling, general, and administrative expenses. These were $4.9 million for the 3 months, and a staggering $9.6 million for the 6-month period. These are the costs of running the business, marketing, sales, and all the overhead. When you combine all these factors, the net loss attributable to Beyond Air Incorporated itself is significant. For the 3 months, it stands at $7.9 million, and for the 6 months, it is a stark $15.6 million. This translates to a loss per S-hair of $1.25 for the quarter and $2.75 for the 6-month period. For shareholders, this means their investment is currently losing value on a per S-hair basis. Now let's talk about where the money is actually going with cash flows. For the 6 months ended the 30th of September 2025, the company used $9 million for operating activities. This is a significant outflow, and it directly relates to those losses we just discussed. On the investing side, they actually saw a net cash inflow of $816,000 for the 6 months ended the 30th of September 2025. This was mainly due to selling off some marketable securities. This is a common strategy for companies needing cash, but it means they are depleting their investment assets. Financing activities brought in a healthy $13 million for the 6 months ended the 30th of September 2025. This came from issuing new stock and other debt financing, which is how they are funding their operations as they are not yet profitable. As of the 30th of September 2025, the company had about $10.7 million in cash and marketable securities. This sounds okay, but remember they burned through $9 million just in the last 6 months. This is why the going concern section in these reports is so important. Management itself acknowledges that these factors raise substantial doubt about the company's ability to meet its obligations with cash on hand, and that they will require additional funding within 1 year. This is a pretty direct statement, meaning they absolutely need more money to keep operating. Looking deeper into their operations, we see they have license agreements for their technology. There are milestone payments related to regulatory approvals and sales, which can add up. For instance, the nitrogen agreement has remaining future payments totaling $0.3 million. Like many tech and biotech companies, Beyond Air utilizes stock options to incentivize employees and management. There are various plans like the 2013 Beyond Air Equity Incentive Plan 2021, Beyond Cancer Limited Equity Incentive Plan, and the 2023 Neuronos Limited Equity Incentive Plan. The unrecognized stock-based compensation expense for these plans is quite substantial, highlighting a significant future cost. Warrants are also a common feature, especially in financing rounds. We see several types here, like those related to an inducement offer and pre-funded warrants. These represent potential future dilution for existing shareholders if exercised. The company breaks down its performance by business segment: Beyond Air, the core LungFit business, Beyond Cancer, and Neuronos. For the 3 months ended the 30th of September 2025, the Beyond Air segment generated all the revenue totaling $1.8 million while incurring significant operating losses. Beyond Cancer and Neuronos are also in development stages with substantial R&D expenses. Now let us look at what happened after the 30th of September 2025. On the 4th of November 2025, they entered into a note purchase agreement for a $12 million loan. They also entered into an equity purchase agreement for up to $20 million. These are clearly signs they are actively seeking capital to stay afloat. And then there is the option repricing on the 4th of November 2025. They reduced the exercise price on a large number of outstanding stock options. This is often done to make those options more attractive and potentially retain valuable employees, especially when the stock price is underperformed. So what is the big picture here? Beyond Air Incorporated is a company with innovative technology, particularly their nitric oxide platform for various medical applications. They have achieved some regulatory milestones like FDA approval for LungFit PH and CE mark approval in Europe. The revenue growth is a positive sign that their products are starting to gain traction in the market. However, the company is burning through cash at an alarming rate. Their significant operating losses, research and development costs, and general administrative expenses mean they are heavily reliant on external financing. The fact that management itself points to substantial doubt about their ability to continue operating without new funding is a major red flag. While the recent financing deals and subsequent events show they are actively trying to secure, their future profitability remains a distant prospect. The success of LungFit PH in the market and the progress of their other ventures like Beyond Cancer and Neuronos will be crucial, but without adequate funding, even the best innovations can falter. It is a high-stakes game of research development and fundraising. What is your take on Beyond Air's financial situation and their future prospects? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more insightful dissections of corporate filings, and please join our Discord community for deeper discussions. Thanks for watching, and we will see you in the next video.